Two of the biggest financial centers in Asia are Hong Kong and Singapore. So when people look to the region to move out here to set up business here and look for a place to incorporate, these two places often get a good looking at. So in this video, we're going to take a look at Hong Kong versus Singapore as a place to do business and as a place to incorporate. Both Hong Kong and Singapore are former British colonies, and from that, both still operate off a legal system that is based on English common law. The British were in Hong Kong for 156 years and they handed it back to the Chinese in 1997. Singapore was under British rule for 144 years. Then in 1963, they joined the new Malaysian Federation, which was a federation made up of former British colonies in the region. That only lasted 2 years. They were expelled from Malaysia in 1965 and have been independent ever since. Taking a comparison of the corporate tax rates, Hong Kong versus Singapore now, Hong Kong has a corporate tax rate of 16.5%, but the first 2 million Hong Kong dollars, which is about 255,000 US dollars, is taxed at half that at 8.25%. There is no capital gains tax in Hong Kong, but when you set up your business here, have a chat to your accountant regarding various exemptions, conditions, and tax treaties that may apply to your situation. Now, Singapore is quite similar. They have a corporate tax rate of 17%. But for the first 10,000 Singapore dollars, you are going to have a tax exemption of 75%, which means you have an effective rate of around 4.25%. Then from 10,000 up to 200,000 Singapore dollars, you're going to have a tax exemption of 50%, which means your effective tax rate in that margin will be 8.5%. So your first 148,000 US dollars will be taxed at about 8.5%. And then over 200,000 Singapore dollars a year, you move up to the base rate of 17%. There are also tax exemptions on offer for startups for the first 3 years. So if you're a startup and you're already booking good revenue and you want to get established in Singapore, you can do that and get an exemption and have some very nice perks for the first 3 years. Looking at the company structure now, in Singapore, you must have a resident director. And if you're not living there yourself, you can have a nominee director, a resident nominee director to act in that role. That's fine. And you can have 100% foreign share ownership. There is no minimum requirement for shareholders. You can have a single shareholder company, and there is no minimum capital requirement except for having to register $1 in paid up capital on the registration of the company. You'll also need to have a local resident company secretary there to act on the company's behalf in dealing with the corporate authorities in Singapore. This might be your lawyer, this might be your accountant, or perhaps you have a business partner there who can fulfill that role for you. Hong Kong is slightly more attractive in this respect as they do not require a resident director. So you can have 100% foreign directors, 100% foreign shareholders. You do have to have a resident company secretary, and there is no minimum shareholder requirement. So you can have a single shareholder, such as myself. I might be the director, I might be the single 100% shareholder, and I might not even live in Hong Kong, but I can still operate out of Hong Kong. For registered paid up capital, all you have to do is register $1 on the incorporation of the company. Now we'll have a little bit of a look at the political situation and developments in the region as far as these two financial centers go. Hong Kong still is a powerhouse in the region, but it is not as attractive to some as it used to be. It's a lot closer to China now, and under the one country, two systems rule, Hong Kong is only guaranteed to operate under English common law for 50 years post the handover date. So there's only a guarantee there that Hong Kong will operate under English common law until 2047. There's no guarantee what's going to happen after that. But you can make an argument that Hong Kong is worth too much to China. It is a gateway between the West and the East. There is a strong incentive there for China to keep things the way it is. But we have seen a few changes happen there over the years with security laws and so forth, but we'll just have to wait and see what happens there. That said, a lot of people are still doing business and are still comfortable working out of Hong Kong, but that will be a decision for you. So like I said, there are a few moving parts there. There are some things that some people will perceive as risks, other people won't, but the fact remains that there is a strong incentive for Hong Kong to stay Westerner friendly. There was a little bit of an exodus of expats from Hong Kong to Singapore in the last couple of years as the two countries dealt with COVID policies in a different way. But Singapore then became quite expensive and and some people started to now go back to Hong Kong. Hong Kong is still a very good place to do business, particularly if you want access to the Chinese market. That's a huge market that you can get access to, really good access to, by being based out of Hong Kong. It's a really nice place to have the one foot in the east, the one foot in the west. Singapore's a bit like that as well, but you'd have to say that Hong Kong has better access to the Chinese market. Hong Kong has announced that there are reforms taking place to make it even more friendly and more open to incentivize Western businesses to come out there and set up shop. They're doing some work in the crypto space. They're incentivizing foreign capital to move out there and develop businesses in the crypto industry. Singapore is quite strong on the crypto front as well. They have established regulations to make it very clear where crypto sits in the financial ecosystem, where a lot of countries are still lagging in that respect. And that has provided certainty to businesses that want to go out to Singapore and develop blockchain and crypto related industries. So both Hong Kong and Singapore are relatively strong on that point. Singapore has a very strong reputation in Asia and around the world as a place to, a bit of a wealth hub, a place to keep your money, a place to invest, a place to protect your assets. We've covered this a little bit in other videos, so I'll put a link up above if you're interested in checking that out. And if you're interested in investing in Singapore, getting access to Asian markets, or in Hong Kong for that matter, you can get in touch with us and we can help you to get that started. Singapore is very open to the Western world. That has been a deliberate policy ever since they became independent in 1965. They don't have many resources. They're a tiny island, so finance becomes a big part of maintaining their standard of living and promoting a better life for their citizens. Just like Hong Kong, Singapore has a strong incentive to stay open to the Western world. It's just worth too much money for them. It's worth too much for their people. So that can provide you with some extra level of certainty that things are likely to stay the way they are. Of course, no one can see what's going to happen in the future. Many of the world's major banks have offices in Singapore. It's politically stable. They have a society and a legal system that is based on a high level of integrity. A lot of people trust doing business there. So taking a brief look now at the ease of doing business in both locations. Both locations offer big advantages when you compare them to other big financial centers in the world, like London, like New York, like Sydney. Hong Kong is arguably easier to get established in. It's a bit easier to get set up and to operate. Singapore tends to have higher standards. There might be a few more checks and balances in place, some more regulations that you have to adhere to, but it's nothing that can't be navigated. Both are pretty good for banking. I don't think you're going to have big issues when trying to bank with the outside world and send international money transfers. And both countries rank very highly in international ease of doing business indexes. There's a reason that these two places have become so well known for being financial centers over the years, because businesses can operate out here, they can get some good tax incentives, they can work in respected jurisdictions, they can get very good access to Asia, and Singapore in particular can be very good for asset protection, but Hong Kong offers asset protection advantages as well, just by the fact of being an offshore financial jurisdiction. So that's pretty much it for the video, guys. We like Hong Kong, we like Singapore. They're both good, sometimes for different reasons, but they can definitely both be used in your offshore plan. There's other things that can come into play in the region as well. It doesn't have to be all Hong Kong, or it doesn't have to be all Singapore. You can have subsidiaries, you can have companies working in tandem. You can get some very good tax rates in other areas like Labuan. It just all depends where you want to live, where you want to do business, where you want to hire. All of this can come together to create an offshore plan for your business and your lifestyle. And we can help you to work through that, work out what's important to you, work out what works best for you, and then to implement it and get you out here living a great life in Asia. Thanks a lot for watching. We'll catch you later.